Welcome back. Let's check markets here. Futures indicating a decline at the start of trading this morning. The Dow Industrials right now down 36. The Nasdaq's down 22. And the S&P lower by 6 after a record-setting performance yesterday. There are high expectations for Nvidia earnings out after the bell tonight. The stock has surged over 200% over the last year. Take a look at where we stand this morning at $949.30. The stock has been trading down recently going into the numbers, but I've got it was down 9% in a day. Sizable move on Thursday as some people are trying to take money off the table after this huge run-up. However, there are others who feel like they're going to see a rally after the earnings. Tom Lee this morning reporting this. We expect Nvidia and broader rally post-Nvidia results, pulling cash off the sidelines to put money to work. Joining me right now is Tigress Financial Partners Senior Partner, Chief Investment Officer, and Director of Research, Ivan Feinseth. Ivan, great to see you. Thanks so much for being here. How important is this Nvidia quarter from your standpoint for the broader market?
The whole trend of Nvidia is very important because the underlying market has been driven, especially the tech sector, by this AI investing theme, and Nvidia is the whole engine behind it. It is the driver of AI. Yeah,
it's the driver of AI. So what are your expectations on earnings?
Well, right now the consensus quarterly estimate is just under $25 billion. I believe it could, which is up almost 250% year over year. I believe it could exceed $27 billion and continue this AI investing trend, as it is not only the driver for the companies like Microsoft and Google and Amazon that provide the platform, but every company is adopting and incorporating AI across all aspects of their business, whether it's supply chain optimization, customer service, customer interaction, and it's only going to continue to improve businesses to run more efficiently.
Yeah, and going into this quarter, we knew that we were beginning to see a broadening out of corporate America spending money on this kind of business, AI, because in the beginning it was largely tech. Adam, you own the stock. I know that. And I got to tell you, there's some reaction this morning about the recent selling in the shares going into the quarter. But if the CEO felt like they were going to underperform, he would have wanted to warn this market. He would have come out with some kind of a pre-announcement, right?
I think so.
The fact that we don't have a pre-announcement,
correct.
I'm thinking, okay, well, then maybe it's going to be a beat, and a beat that's big.
Well, not only would he have pre-announced, but, you think about what Jensen Huang, again, CEO of Nvidia, has done the past 2 quarters. He's come out and actually raised estimates and said, we can't keep up with demand, which is actually the opposite because he's doubling down. And I think, admittedly, as someone who is long the stock, I'm a little nervous because everything's got to be perfect, and he's got to raise guidance again.
But he didn't raise guidance going into this quarter, did he?
He didn't go. No. He raised guidance at the end of last quarter, but he has done that twice now, so he's expected to do it a 3rd time.
I see. Okay.
Yeah.
Tom Lee writes this. Looking at the last 8 reactions, the muted reactions have been fiscal 3rd quarter results and a sizable reaction seen post-fiscal 1st quarter. But the average is a 20% move.
Yeah.
In the last 2 years after earnings.
I know. Well, think about it. The estimates that we're going to get today, right after the close, we're looking for earnings to be up 420%. I mean, when was the last time you heard earnings, right? And revenues, top line, just money come through the front door, up 245%. These are staggering numbers. They're not sustainable.
Yeah.
You probably slow to, I don't know, is it 75 or 90? But again, 75 or 90%, if that's what they slow to, that's still so much faster. I mean, the S&P as a whole is growing maybe 8 to 10%.
Yeah.
That's what sets this company apart. It's the entire AI ecosystem, as Ivan just said.
Well, the seasonality remains a factor as well. Ivan, let's say we get good numbers. Would you want to broaden out into other AI-related companies, or do you want to stick with these pure plays? How do you play tech in an environment where interest rates are pretty much stagnant for the last couple of weeks? Take a look at the 10-year this morning. The 10-year Treasury right now trading at around 4.4%, exactly 4.4% up, 2.7 basis points. And that's after Fed Governor Christopher Waller said that several months of good inflation data before lowering rates is important, saying if the data were to continue softening throughout the next 3 to 5 months, you can even think about doing it, that's a cut in rates, at the end of the year. So this is the 2 forces in markets, right? Ivan, you've got AI, Nvidia, and all the other corollary plays around Nvidia, and you've got the rate story. How do you want to allocate capital?
Well, I think the #1 driver of the market continues to be revenue and earnings growth. the number one driver of the economy continues to be jobs, 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 and we are under 4%. So we are at full employment, and we're still getting good, strong monthly job creation numbers. So I think the labor market is, going well, not too hot to maybe force the Fed not to want to cut rates. Inflation is trending lower. I think, though, the catalyst will be that the ECB will cut rates in June or July, and then Powell will follow a month later, and we could see the first rate cut by the Fed as early as July and maybe as late as September. And I think we'll get 2 rate cuts. And that just puts the Fed on the side of the bulls. But I still say it goes back to this underlying theme of driving productivity and creativity, which is being driven by AI.
So do you think we'll have an up year in stocks, or are you in the recession camp, second half?
No, absolutely. I began the year with my year-end price target of the S&P at 5,400, and now I'm at 5,600. So I think we have it's almost over 11% right now, and I think there's more to go. And I think that its earnings, its corporate efficiency, its growing profitability, also being helped by excess cash being returned to shareholders through ongoing dividend increases and share repurchases. We came out of Q1 with a record number of dividend increases and a record level of new share repurchase authorization. So companies are confident in their cash flow, and they are confident that it enables them to return cash to shareholders at a massive level.
All right. We'll be watching all of that. Ivan, great to get your take on that. Thanks so much. Ivan Feinseth joining us.